Yo, the fuck is up, people? Today I'm going to be doing my trade recap for my Friday long that I took during the London session. And yeah, let's just have a look here. This is the outline of the trade. As you can see here, we've got this external range liquidity as we were moving through here. We're in a bit of a consolidation here. So if you know the market maker buy model, consolidation, manipulation and distribution, and I didn't get in the side of the manipulation for the market because it just shot down here and it didn't retrace enough on the 1 minute for an entry. And then on the 5, and it came down lower, took out this, tapped in this for an institutional order flow entry drill, and then we shot right up higher to take out these relative equal highs up here. As this failed to get above here, then creating relative equal highs, and we're going to go higher here. So yeah, without too much waffle, let's get into it. Alright, so here, looking at my actual execution, we have this, what I'm looking at. We just recently taken out sell side here and then tapped into the 15-minute fair value gap right with this candle here, rejection, and then I was watching this SIBI and then wanting to close outside of that range so that could act as my market structure shift to go long, and which is exactly what I did. I was just waiting for that to happen because basically my strategy works on more of an order flow basis. Like, I wouldn't have needed to see this high taken, because if we see that, then it's already disrespected the bearish order flow and it's going to go higher. So that's all I needed to see here. Close outside of the range. It's perfect. Algorithmic fills me, and then it chops around my entry for quite a while actually, although it never disrespects any of the PD arrays. It never disrespects my order block. So I just got to sit and wait here. I kind of had my finger on the trigger just in case it wanted to come back on me, because that's just how I trade. No, I hope you guys can't fucking hear my laptop absolutely screeching like an airplane right now. Has a bit of a fucking trouble playing an execution video. But yeah, I'm just monitoring here, marking out the wicks, because wicks are one of the most powerful PD arrays because they're on almost every candle where you have a wick like that, a wick like that, a wick like that. I use them for PD arrays for reaction as well as just sentiment, because when I'm bullish, I like to see these big premium wicks get closed above like that. Although we didn't go higher from here, that's definitely one of the signs that I use as a way to determine, are we going to go higher? And when I see a lot of the time things like, let's just have an example here, like this long wick created, fails to displace below, goes higher. This long wick created, fails to displace below and close below, goes higher. Those are like the exact things that, like, say I was short here, I would not like to see. Like, this is something I would need to see close below to want it to go any lower. And as you see up here, the same thing kind of happens. Long wick creates, doesn't close above, runs away. Long wick created, doesn't close below, runs away. Constantly does the same thing, and then see that wick closes above it, runs higher. Long wick on the downside, closes below, runs lower. So it's just the same thing here. I'm looking at these, looking at that as it's created, still watching that, looking at those lows taken, digging into this here, which is my entry, the order block. I took it off. Got my finger on the kill switch as usual. I don't think it actually reached the consequent encroachment of that wick there, but it just dug into the first quadrant of it. That's the kind of reaction I'm going to see. And then when it doesn't even get to the 50% of the wick, that's even more one-sided, or even more in this case bullish. And one thing I'm really liking is how it's just staying perfectly one in between the consequent encroachment of that wick there. So we type 1 on the consequent, that one right there, staying above it, also staying within the range of this inversion fair value gap, and above the consequent, the mean threshold of the order block I entered on. So all of those factors put together, I'm extremely confident in this trade now. Just moving my stop up a little bit because that short-term low should now not be violated, because we've seen this act as a propulsion higher. And now if we came down here, there's definitely no way. If we came below this, we're going to take out that low 100%. So I'm allowed, or I permit myself to put my stop loss there to reduce the risk by a little bit, to take off some of the risk. So here I'm marking out this fair value gap. It's just a big one created after the displacement there. Moving my limit because when I'm seeing this, it's unlikely that we're just going to see that as a retracement, because there's nothing here that would be retraced. See, most of this is balanced. There's almost no imbalances in here. So the next target would be this high, and that imbalance there, this little imbalance in price, it got filled slightly, but we've still got this to get through, and then that high would be my target. But after seeing this, I know for a fact I'm on side, so I can full pull my position up to here, because I only had one contract on. I can't close half a contract or anything. So my plan for this trade was just to jam my stop up and have it here, and in case I was offside, then it would stop me out with a decent amount of profit. I'm going to move my stop up to like some point here. But yeah, I ended up full pulling the whole trade. But here I'm just watching the encroachment of this wick here as this happens. Now this here is a kind of, what's it called, a telltale. It's a telltale sign that it's slowing down, and it's normally something I don't like to see. But here it's permissed because we have this fair value gap here. So there's a PD array here, and as long as this holds, then this is irrelevant, the fact that we didn't close above here or haven't yet closed above here. As long as it stays above this, and it's valid. It doesn't need to displace above there straight away, because we've got this supporting price higher. This doesn't need to necessarily do it right now, just as long as it does it at some point, because obviously it has to close above there to go higher anyway, or at least trade above it. So at some point it will close above it. Didn't mark it out, but because I wasn't really paying too much attention at this point, because I was kind of getting ready for college. But there's that little volume imbalance there, makes this. Seeing it chop around for a little bit. I mean, I definitely had the higher time frame up because I have a couple other monitors while I'm trading, but not exactly sure where we're keying off of right now to see this kind of dip in momentum. Here I guess could have dragged this out. This is a former BISI turn inversion that I guess you'd want to see it. You would want to see it closed above. I mean, boom, done it there. Now I put my stop there below that fair value gap, because if we come below it, I mean, maybe I should have put my stop loss like there below that low of that candle, because allowing for a mohawk, but it didn't mohawk, it just came into it and then it traded higher. Now that's a order block, although I'm using a rectangle, that is an order block there. I'm just marking out the wick to the open. The mean threshold of that order block, just marking that out. Then the consequent encroachment of that wick there, watching that. This here, if you guys want to know, it's just an indicator called the higher time frame power of 3. It just shows whatever candle you want it to show, but for me this is the daily candle. So that is the previous high of today. Maybe I should have put my limit up there, secured a little bit more, because I'm pretty sure it went up there. So just secure a bit more profit, a little bit higher. Could have just jammed my stop up at that point, but I still got a very good payout from this. Took it on my funded evaluation account, in fact. See, now this is something here. Look, we have a volume imbalance off there. It's keying off of that as well as the fair value gap. And there, actually, what happened was that I closed my laptop while I was looking for something for college, and then it just skipped like the movement of this candle. But after that one, we had a big expansion upwards, and then here you can see in the next couple of seconds we just break really quickly higher and take out my limit. So there, boom, closed out. Really nice trade. It was about 8.5 RR risk to reward, and so yeah, I took that on my funded account challenge, and for this week I'm up by 1%. So yeah, it's been a successful week. Without a face cam sometimes, because I left my flipping SD card in college and I was doing photography. But yeah, see you guys in a bit with a weekly analysis.